Hey guys, Sean here. China and America has always been reluctant trading partners. America needs Chinese goods, while China has always been hungry for US dollars. But things are changing. China no longer loves the dollar, and in fact, they are starting to offload their holdings of US treasuries. For the first time in over 12 years, China's holdings of US debt has fallen below $1 trillion. A deadly storm is brewing. China's de-dollarizing. They are moving towards other assets, and their financial weapon of choice is gold, the only physical asset on planet Earth that has no counterparty risk and has outlasted every single currency. Now, ever since China entered the World Trade Organization with the help of Bill Clinton, they were big fans of the US dollar. They were buying tons of US treasuries till their holdings hit a peak of $1.3 trillion in 2013. However, there is a trend over the past decade of China getting rid of their US debt, and this is only accelerating. They started the year with over $1 trillion, and now they are just sitting at 980 billion. Now, if we take a look at the official treasury data, it's clear as day that China's letting go of their US debt. But it's not only China. The BRICS nations and even Saudi Arabia are all starting to dump their treasuries. Brazil and India both reduced their holdings from 12 months ago, and Russia was even dumping their dollar assets back in 2021 before the sanctions hit. However, it's China's relationship with the US dollar that we have to focus on, because whether we like it or not, America and the People's Republic of China has a symbiotic relationship. I think we need to understand that the United States benefits just as much as China holding their debt, and we need to peel back the layers of why these two strategic enemies still need each other, at least for now. Today, we see tensions escalating between the two countries. They seem to be at each other's throat at every point. But if we look under the hood, China and the US are incredible trading partners. The US is China's biggest customer, buying more than $450 billion worth of made in China products in 2020. However, the US buys more than they sell to China, and that's why there's an enormous trade deficit. And this has been working out for both sides. America gets real tangible goods and products in exchange for paper dollars that it can just print. Now, China was happy with the arrangement because they desperately needed dollars. China is an export-heavy country. If Russia is the world's gas station, right, then China is the world's factory. It is still a manufacturing powerhouse. Their entire society, ecosystem, and all their regulations really make it a paradise for companies like Apple looking to make cheap iPhone overseas. But the biggest advantage China has is a competitive currency. Now, unlike other currencies in the world that float freely around, the Chinese yuan is kept artificially low so that it's cheaper to buy Chinese goods. And to keep this arrangement going, which some would call currency manipulation, right? China needs a lot of US dollars, and that is why they buy US treasuries. Now, this is nothing new. It has been going on for decades. So let's say you're a merchant in China and you sell cars to America. You get paid in US dollars. You then take these dollars to the Chinese bank, which exchanges them for a fixed amount of yuan. And remember that the Chinese central bank can also print as much currency as they want, so now the yuan is devalued and they stockpile this mountain of US dollars, creating scarcity. This makes the US dollar actually stronger. Now, what does China do with their growing dollar reserves? They invest them back into US treasuries. They do it to earn some income on their dollars, and treasuries are more or less risk-free. And what does this do? It drives demand for dollars, keeps bond prices high. So in a twisted sense, China is helping to keep the dollar propped up as the world reserve currency. It's a win-win partnership. America gets to borrow money at low interest rates and buy more products, while China can export more to the world thanks to a cheaper yuan. But all that is changing. China now believes holding US debt and dollars is more dangerous than potentially blowing up their own economy. We need to understand how painful it is for China to dump US treasuries because they are effectively hurting themselves. If China gets rid of treasuries, they are weakening the dollar and they are making the yuan stronger. And that is very bad news for their exports. Plus, if they just dump everything tomorrow, that will send bond prices plummeting and China will be in a deeper loss. And that's why we are seeing them slowly offload their treasuries. They are getting rid of it at $10 to $20 billion a month. That seems slow. But if we project it out, they'll be able to drain half of their holdings in just 3, 4, maybe 5 years. Now, the big question is, why is China doing this, right? Why is China taking the risk of destroying their own economy to de-dollarize? We might be thinking, maybe it's because the United States has been printing money like drunken sailors and inflation is at 9%. Now, sure, that is a problem. Because of this inflation, dollars overseas are getting weaker and China's stash of treasuries are getting devalued 100%. But other countries are also printing money and inflation rate there is 20 or 30% in many other parts of the world. And the true answer is that China is afraid of sanctions. They are afraid of the United States freezing their overseas assets, including their US dollars and treasuries. Now, when the West froze all of Russia's assets, I think that was the moment that China really finally woke up, right? They realized that, hey, my money overseas is not safe. I need to cash them out and I need to bring my assets home. Now, I want us to take a look at this because it's really interesting. Russian sanctions started on the 28th of February this year, and what do you know? China's treasuries dropped down dramatically from March onwards. Month after month, they are selling off in clips of $20 billion at a time. And where do you think all that money is going to? It's flowing into gold. Because you need to think from China's perspective. If I sell off my American bonds, I get dollars, I bring dollars back home to Beijing. But what if the US blocks me from SWIFT and bans me from transacting in dollars, right? And in that event, the US dollars are as good as monopoly money to them. It has happened to Russia before, and it could technically happen to China. Now, whether you like them or not, we need to get in their shoes. And this is why they are hoarding gold. Gold is a neutral asset that holds value for a long time. If they hold it physically, no one can confiscate it from them, right? And we know for the longest time that China loves gold. They have been the world's biggest producer of gold for many years now. They have been importing gold in record numbers as well. Now, even in 2020 during the lockdowns, China was still buying gold. They can't help themselves because to them, it's a matter of national and financial security. Now, the official numbers tell us that China has slightly under 2,000 tons of gold, but I believe they're understating things, right? We have to understand that China rarely exports their own production, and in 2017, they told the world they are sitting on over 13,000 tons of gold under the ground. And this tells us how serious the Chinese are about gold. They are retaining their own domestic production and they are converting their treasuries into gold. Maybe not all at once, but it's definitely happening gradually. And other countries are taking note. They understand the extreme tail risk that exists if all their eggs are in one basket, if all they hold are US dollars, and if they do something that displeases the United States, the US doesn't like this, the entire basket can get taken away. And it's a real issue that we must recognize because there is a gradual flow out of dollars into other stuff. The US dollar reserves has dipped under 59% for the first time in history. There are many more countries starting to diversify away from the dollar. We even have Israel, historic ally of the US, reducing their dollar holdings for the Chinese yuan. Now, I believe we are moving towards a multipolar world where there will be multiple reserve currencies. Even though we have the BRICS nations looking to develop their own reserve currency, I still believe the dollar will be number one for at least a few more decades. Because compared to the United States, other countries are having deeper economic problems. Just take a look at China's real estate bubble that's ready to pop and their Henan banking deposit scandal, which is just horrific. However, we still need to see the signs. The signs are still there. Now, a lot of countries that are allied to the United States are also dumping treasuries aggressively. We have Japan selling their US debt 7 months in a row because the Japanese yen is suffering. Even Saudi Arabia is slowly reducing their treasuries by a few billion a year. Right now, I think countries are experimenting around with holding other types of currencies. Maybe the Saudis are trying to hold more yuan. Maybe they will experiment with the Indian rupee or Russian ruble. But eventually, I believe there will be an eventual shift towards true money, which is gold. There's just no other long-term alternative that solves the two biggest problems with modern money, and that is the ability to inflate the currency to infinity and the power to freeze assets. And I've been thinking about it for quite a while now, and all roads they just lead back to gold, right? Now the central banks know that. Except for one quarter in 2020, they have been stockpiling gold in their reserves aggressively, buying even more in April and May, even when gold was above $1,800 an ounce. That's quite a high price for gold. They know what's up. They know what's coming down the road. And I want us to take a look at the 2022 Central Bank survey conducted by the World Gold Council. 61% of respondents expected to increase their gold reserves in the next 12 months. They believe this is a good time to add more gold to their vaults, and only 5% are looking to sell. And this tells us that behind the scenes, central banks are dumping more dollars for gold. And if you aren't invested in gold yet, I really don't know what to say. The signs are getting clearer with each passing year. And I think you guys know me. I'm not a gold nut. I'm not crazy enough to believe that gold will perform well in every environment short term. but I want us to stretch our horizons out and look 5, 10, 20 years into the future. Things aren't really looking good for the dollar, and the big worry that the United States should have is if China and Russia comes together and decides to try a new experiment. An experiment where they decide to pool together their vast resources and they go, okay, you want our oil, you want our gas, you want our wheat, we want you to pay us in gold or use our own new currency. And this alone will split the world into two camps. The Western world that only believes in the dollar and can only buy resources using the US dollar, and the Eastern world and other countries which now has the choice to buy Russian and Chinese commodities using the new currency or by using gold. And that's why I believe we are moving away from something unipolar to something multipolar, where it's really free for all and it's the best deal on the table that will win. And from the way the dominoes are really lined up, the real competitor against the US dollar is not the yuan, it's not the ruble, but it's gold. Zoltan Pozsar, he mentioned a new world order is rising, Bretton Woods 3 is coming, and it's going to be centered around commodity-based currencies. And right now, it seems the West is going to accelerate even more sanctions on Russia. We are talking about oil price caps and gold sanctions, and this is just going to polarize the world even further. It's really not good news, guys, and the signs are clear as day. The dollar is still high in the sky, but the sun is setting. But through money, gold, I believe it is still in its sunrise. And personally, I have no idea which currency will win. The United States, they are masters of money printing and deficit spending, while China still has big problems with their own economy, and their real estate bubble is a house of cards. So it's a coin flip on who will win. That's why in the long run, I'm not buying US Treasuries, I'm not buying Chinese yuan bonds. They all have that counterparty risk. They all have that unique risk of governments going crazy and doing something stupid. That's why I only truly trust in gold. Right now, there's a lot of instability in the gold market. We are seeing the price jump by $100 one week and then collapse by $50 the next day. But it's very important we see the long-term picture. I cannot tell you when to buy gold. I cannot predict prices. I don't have a crystal ball. But if you're at all watching world economics, you can really tell the story for fiat currencies doesn't end well. We are all experiencing record levels of inflation, and we are in the twilight zone where there's a recession, but the Fed and the US government are actively trying to redefine the term, right? So there are fewer and fewer assets out there that are trustable. And I think we need to watch the hard numbers for ourselves and decide what to do. Don't take my word for it. Do your own research and dig through the mud. Now, if central banks fully believe in the dollar, they should dump all their gold and go long on treasuries 100% of the way. But they aren't doing that. They know over the long term, the purchasing power of the dollar is going to go down, and there's always a chance they can't access their dollars tomorrow. So I really want us to take a step back and not just focus on the price of gold. Yes, the price is important, I get it. Getting gold cheaper is always better, but the smartest people I know are setting aside some money month after month to stack more ounces when they can. I'm hoping for the price of gold to crash. I'm secretly hoping for the Fed to hike rates to 5% to 7% and crash heavy asset known to man. Because if it does, I'll be scooping up more gold because inflation will forever be around and the money supply will start to expand again sooner or later. Even if we get down to 2% inflation, it is still inflation. This contraction is only a speed bump. So let me know what you think. Is China going to completely dump their treasuries? Is gold still a safe place to store your wealth? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this recession. Thank you guys for watching, and I'll see you soon.